please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the last read, the Nifty regained the 11,500, gaining more than 1%, and the Sensex also managed to keep its head above the 38,000 mark on Friday. The broader markets also outperformed, with the bank Nifty and the mid-caps rallying over 350 points each. But that was about Friday. A lot has happened over the weekend with the global trade tensions coming back. But most importantly, Nigel, today the street will perhaps watch for the local cues and the government meet that happened over the weekend.
That's right, Anisha, unless something really special came out of there, you would expect maybe a start at the green, and then in fact that could get sold into as well. The SGX Nifty, for starters, is indicating we're likely to see a downtick, maybe a 30-point cut just to kickstart trade. But from Friday's lows, that's September 12th lows, the markets had a big run. Nifty up 260 points, Nifty Bank up nearly around 600 points odd, and even the Indian rupee saw a good pullback if you take a look at it from the lows that we have seen in Wednesday's trading session. From around nearly 73, it came down all the way to around 71.5. And then, in fact, towards the end of the trading session on Friday, we did see it give some of them back. The FIs, they went into this event, so to call it, long, because they bought big time in the cash market. In the last week itself, for almost, 3 out of the 4 trading sessions, they were selling close to around 1,000 crores. Now, on the last day, that's on Friday, they bought more than 1,000 crores. The DIs chipped in there as well with around 120 crores odd. So the FIs, they bought getting into this event. But in Friday's trading session, it appeared, besides the flows that came in from institutions, there was some covering. The Nifty open interest was down nearly around 2%. We had a bit of a bounce out there. The Nifty Bank open interest, well, that was down nearly around 17% odd. So we saw a bit of a bounce out there as well. So the shorts, they were covering their positions. They were saying, let's not get into this, go into this event with those short positions. So some of them did close it down. And the FIs on the whole, well, they unwound close to around 8,800 short contracts in Friday's trading session. That's nearly around 5% of the total open interest, telling you that, there was a fear out there in terms of the bears. They said, let's not take any risk. Let's shut out those positions. Let's see what, in fact, the PMO has to announce. And then, in fact, we'll take a call on the index. From the start of the series, the long positions have come down drastically. And in fact, now the FIs, they're net short on the index itself. There was some shorting, though, Anisha, from the top, because we tracked the premium on the Nifty. When we started off the series, it was more than 50 points. Now it's down to around 32 points. Even in Friday's trading session, in that roaring rally, we did see that there was some contraction in terms of the premium. Tell you some shorting at the top as well. In terms of the FIs and the options data, well, they bought some call contracts. If in fact something fantabulous was announced, then they would make some money on those calls. They unwound some put contracts though. And in fact, if you take a look at the writing, they, some of those calls that were written, they shut some of that down as well, both on the call side as well as on the put side as well. Overall, the FIs have bought more puts than calls. So if things go wrong, there is some cushion on the downside. And they've also written more puts than calls, telling you if you're going to see a downtick, we're not going to see a very, very sharp downtick. They believe there is support at some levels. The 5-point plan, we'll have Lata as well that will join in and tell us more about that. But basically, the Government of India, they've taken stock of the situation. They're saying the 3.3%, we're going to be sticking to that. And more importantly, they're saying they're not going to be cutting any of the capex, the capital expenditure that they're talking about. I don't know how much of that, will play about, because the GST collections need to pick up. Only, in fact, then, they could stick to this. But short point, the rupee should be in focus. In Friday's trading session, it gave up some of those gains. That's the intraday chart out there. And the IT index as well did recover from the low point of the day. So keep an eye out on that front. One good thing, though, is that the dollar index is still below 95. So that'll be good news. Maybe, in fact, we could see the rupee could get a bit of a leg up from that and the commodity that came in from the FM. Levels you're looking at, well, on the downside, 11,250. From there, we saw a bounce. So keep an eye out on that mark. The bulls will believe we can defend that mark. That's 250 points away from current levels. SGX Nifty suggesting a downtick. Let's see whether or not at some point of time that's bought into.
Okay, Nigel, thank you so much for putting that entire picture into perspective. But you mentioned about the IT index that we need to watch out for. What are the other stocks that we should keep an eye out on?
IT and rupee, we'll watch both those two very, very closely together. So we'll keep an eye out on both those two factors. Besides that, we'll be looking at Tata Motors. They'll be meeting a lot of investors this week. We have Voltas as well. Next few days, they're going to be meeting a lot of investors as well. Yes Bank, well, they have approved the issue of NCDs and unsecured, funds to the tune of around 3,000 crores odd. So keep an eye out on that stock. Bank of India, they're saying that they're looking to raise close to around 1,000 crores from sale of non-core assets and real estate. in this kind of a market, wonder how much of that will really fructify. Keep an eye out on that stock though. Sadhana Nitrogen, another smaller company, they're going to be considering a stock split. But if you pull up a last 1 month chart, you'll see the stock has moved from around 750 to 1250. So just keep that in mind. The stock has already had a big run. Linde India, remember they're merging internationally with Praxa. So that stock should be in focus. They've approved divestment of certain assets of the company. So that stock should be in focus. BCL Industries, if there's going to be such a big run in terms of, all these sugar stocks because of the ethanol price hike, BCL has come out there. Now they're saying, yes, we're going to be gaining significantly because of the change in government policies. So that stock should open up in the green. And Sterlite Technologies, they're talking about doubling their optical fiber cable solutions. So keep an eye out on that one as well. Sterlite Technologies is reading a couple of brokerage reports. They believe it's positive. And finally, no news is in fact good news for Tesla, Anisha, from the international markets, because the previous week we had Elon Musk. He was smoking on in one of those TV shows. The stock did take a big knock last week. No news. No knee-jerk reaction from there. So the stock was up close to around 12%. So it goes to show no news is not really,
bad news at all.
Bad news.
No
So
news
investors
can be
will
good
be
as
happy.
well.
And more importantly, they'll be hoping, hopefully it doesn't light up this week sometime.
Back to the big story then that we have been tracking. Finance Minister Arun Jaitley announced measures to boost market confidence, curb the widening current account deficit and stabilize the rupee. Lata is here with the analysis. Lata, what is your reaction to these measures that have been announced? Do you see the rupee reacting to it today?
Well, actually, the first reaction we have is from what you call the NDF market, which is rupee being traded offshore. And that's looking like a very ugly number. It's a 1 month forward rate, NDF forwards. So 1 month forward rate is actually 72.83. And therefore, if you take the cash, it can open at 72.40, and that's not looking very good. But the NDF market can be notorious, and suddenly by the time we come to 9, it can recede. In any case, the rupee should get some kind of support from crude and dollar being lower. But the steps themselves are, as most dealers would tell you, underwhelming. In graphic Hindi, one fellow told me, "Pahad ka apeksha tha, chua nikla." That attitude was very much there. But what was most welcome was that they will stick to fiscal deficit, coming from no less than the Prime Minister. That's extremely positive. You don't want twin deficits. One is bad enough. The Reserve Bank, of course, should be there so that we don't look too bad to support the day after the steps were announced, the active trading day. But I'll tell you just very quickly about the steps itself. Many of them are FPIs investing in masala bonds, FPIs, foreign portfolio investors investing in Indian corporate paper. They will do it only after the rupee, stabilizes. So those are out. Any immediate getting funds from abroad are out. The under 1 year ECBs are the one that will be taken, and that's the worst thing you can do. If you are consuming more than you are earning, which is you're importing more than you're exporting, you don't fill it with under 1 year loans. That's the worst thing to do. You should curb consumption, or you should get long-term flows like FDI. Of course, they can't be done in a day. The market will look for steps to curb imports, taxes on some kind of import duties on consumer items, like your iPhones and Samsung or whatever. They will definitely expect curbs on that, and a very good export package, because exports are doing terribly for the last 2 years. You blamed it on DIMO and GST for some time, but now, we just have to pull ourselves by our bootstraps. Something like this, removing oil companies' demand and supplying it directly by the RBI. These are all what the market was expecting. And therefore, today it looks like at least the morning rates from the offshore markets are looking extremely disappointing, but let's wait for 9 a.m.
Okay, all right, Lata, thanks so much for that. Well, we spoke to a whole host of experts on the measures announced by the government to control a widening current account deficit. Let's hear out what they had to tell us.
There has been, in the last few months, there has been no measure to encourage exports or to encourage industry to export. I am not really sure that the finance ministry, working in isolation, without looking at the total economy, particularly the goods and services economy, is going to be able to solve this problem. And this appears to be a small measure, maybe too small, too late. What is required here is an absolute focus on picking up certain selected industries which have been in the past doing extremely well in exports, look at their problems, and announce a big bang relief measure for those industries to improve their exports. And this should be done, and this, I think, will bring much more confidence back into the economy, back into the currency market, and back into absolutely into the equity markets as well.
I think the reiteration on the fiscal deficit target is very positive. One thing I would add is he also reiterated that he will adhere to the capital spend target. You know, the last year, the government was guilty of blowing up the revenue deficit and actually cutting on capital expenditure. So that's a very, very good thought as well. Having said that, second point, the question mark about the fiscal situation still remains, unfortunately, even though it's a good commitment to give, because GST collections aren't looking great. You have the MSP issue, and you have the subsidy on account of oil prices and LPG, which is going to go up. So there is going to be pressure, and the market will be watching that very closely. Last point, I wish they had announced something about austerity measures as well. I know we have this focus on growth right now, but at a time when our current account deficit is blowing up and our fisc is not looking great, there is a need for austerity measures and other financial stability measures.
I don't think this will help immediately, but in the medium to long term, it will definitely help. See, I think a couple of other things which could have been thought through, or which could have perhaps been done, which would have made masala bonds more palatable or more easy to access. One is the current period. The period for a masala bond earlier used to be 3 years, which was a year ago or so raised to 5 years. Now the demand really is more in the 3-year category, not in so much in the 5-year category. So if that could be reduced to 3, it would be a great help. And the other thing is that the ECB is up to $750 million fall into the automatic route. So you don't need to go to RBI for specific approval. But masala bonds do not fall into the automatic route. So you have to go, to the best of my knowledge, to RBI for getting approval. So if this also, up to a certain limit, say 5,000 crores or some such amount, is made free, then it would be possible to get the money faster. So if you want quicker action, then I think the process of getting the approval could be done away with. It should fall in the automatic route.
One completely unsaid point is none of this can happen unless the government does labor reforms, which the government gave up right in the beginning of its tenure. There's no reason why they cannot do similar significant reforms that would effectively promote exports, correct the current account. Of course, that doesn't have a short-term effect except an announcement effect. One thing we do not have is the presence of large firms in labor-intensive manufacturing, and the government would do well to examine the report and see what can be done to encourage large firms to go into exports.
My view is that for 3 years there's been no thinking on export policy. This needs much more concerted thinking. You should reopen the policy decisions that were taken by the finance minister in 2012 on special economic zones. That was your largest growing sector for exports. There is no evidence that the Department of Revenue has produced that it has fantastically increased revenues by shutting down SEZs or virtually killing the incentives.
Well, let's do one thing. Let's go across to Sonia, who's here with what the brokerages make of the government's measure that were announced over the weekend. Sonia, good morning. Over to you.
Hi, good morning. Thanks for that. Well, there is a wave of disappointment across brokerages. As you heard, a lot of the experts say some more measures were, expected by the street. Deutsche Bank says that there was no big bang announcement related to the FCNR swap window, and these measures are unlikely to change the near-term balance of payments issue, which is really the need of the hour. They also say that they expect more announcements aimed at reducing imports over the next few days. HSBC says that these are marginally positive steps, but global pressures and fundamentals still matter more for the rupee, and policy action will need to get the sequencing right in order to be effective. They expect a 50 basis points rate hike in Q4 of calendar year 2018. Nomura says the government's response is appropriate, but the measures will definitely underwhelm the market because expectations were higher. The policy strategy for now is to finance the deficit without sacrificing growth, and policymakers have moved from the first line to the second line of currency defense, which is a positive, but they do expect more measures in the weeks ahead. And finally, Citi says we won't be surprised if the rupee falls back to those lows of 72.91 as a knee-jerk reaction because of the disappointment. There are pressures from the market to deliver a more sustained solution to the current account deficit funding problem, and the uncertain global market backdrop will result in larger volatility. So all in all, there's a bit of disappointment post the measures that were announced.